Hi friends, very good morning all of you. I hope all of you are doing great. And today we are here with a new subject, new batch for CA intermediate students appearing for November 2022 examinations. As all of you know, the syllabus for CA, CMA and CS are more or less same. If there is any open free resource video in our cap classes mobile application or YouTube and if you are a CMA student or CS student, you can 100% look at it. It will be completely relevant for you. But primarily the intention of this batch is for CA intermediate students. So always, whether you call it a crash course or a regular batch. So whenever we say it is a crash batch or a revision batch or something before exams, I 100% ensure that I teach conceptual so that two categories of student. One is a student who has already attended full classes and who wants to attend again for practice and revision. This is one category. Another category is those who have never attended financial management class for CA Inter and who is willing to attend for the first time in life. So for both of them, we give this batch because imagine simple logic. Even though you have completed coaching already and you failed and you want to attend again, means what? You need concept clarity plus practice. Even a student who's attending classes for the first time also need both, no? So what I do is this in crash course, I never start with problems. I never start with, revision. So this batch, whether we call it a regular batch or a crash batch or a, whatever the name you put, always in my batch, I explain the concept, theory, you will understand what you are going to do, and then you will play football with the problems. That is how I put my course. So this financial management, whatever we are going to deal with for students who are writing exams in November 2022 or subsequently, maybe in 2023-24 also, the syllabus is same so far. If there is any amendment, that we'll see later. Not a big issue. I have been here for the last 10-15 years. I have not seen any drastic changes in FM. Right from 2006 till 2022. Today we are recording it on 27th July 2022. That means from 2006 till now, 16 years, I have seen only two changes in financial management. What is that? They have introduced three new chapters like dividend policy, lease financing, and what is the other topic? Risk analysis and capital budgeting. And then after 2-3 batches, they deleted lease financing and they kept remaining two: dividend policy and risk analysis. Other than this, all the traditional topics, whatever are there, you call it capital budgeting, cost of capital, capital structure theories, all these things are common. So, and you see, I taught ACCA, I taught a portion of CPA and CMA, I taught Indian CA, CMA CS. I'm a regular faculty in ICA, I'm a regular faculty in ICMA, both, the chapters physically also. So, FM is like a global concept. FM is like a global concept. It is not like, what is capital budgeting in India, what is capital budgeting in Europe, what is capital budgeting in CA, what is capital budgeting in CPA. It remains same for the last 40-50 years. It is same. So don't worry about it. Whether you are doing a regular course or crash course or CA or CMA or India or England, don't worry about it. The concept is same, and I will take you through in this journey. I will walk, along with you in the journey of learning financial management. Let us start with the syllabus. Okay, so open a new page, put the heading financial management, write down the date and time, and under that write down contents. We will go to our beautiful ICAI website. Dun, 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 dun. This is our new website of Institute Board of Studies. They have restructured the website the way, the look and feel, what we call technically user interface, they changed. Inside files are same. Okay, what they say, old wine in new bottle. So they say old wine in new bottle, no? So we say new coffee in old bottle. We are coffee people, not wine people. Okay, chalo. Anyway, put the heading financial management. One good news is in the proposed syllabus, this financial management and strategic management are going to be, one subject, FM and SM. That is ideal, I tell you. In CS, already it is there like that. In CS, I remember teaching FM and SM together as a part of one paper. Okay, not I remember in teaching 100 years back. I teach now also. So now in CA also, maybe probably they are taking same FM and SM put together will be one. As of now, FM is a 60 marks paper and economics for finance, EFF we call. That economics is for 40 marks, both put together is for 100 marks. That is the current syllabus. In the proposed change, there is a proposal that FM and SM are going to be one paper. Probably EIS and EFF might be deleted. But EIS is a subject with a lot of scope. So probably they'll put it somewhere, maybe optional paper or CA final, somewhere it will be there. Okay, so you cannot complete chartered accountancy without reading technology and emerging technologies. Okay, that is mandatory. Okay, so shall we start? So put the heading financial management under that chapter 1, scope and objectives of financial management. So by the time you copy this in your notes, maybe a very quick 30 seconds or 1 minute introduction I'll give to the topic. Okay. So basically this chapter, hello, you keep writing and listen. Okay. So I'll tell you when you have to stop writing and listen to me. Then you have to stop writing and listen to me. But when I say keep writing and listen to me, that means it is not examinable. It is not conceptual. It is informative. If it is informative, then you can keep writing or do something, and listening or hearing can be secondary. But if it is conceptual, I'll say, hello, 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 look here, look here. Then you have to do it. Okay. So now it is like Kesariya song you're listening now. Beautiful background, colorful, and then you are enjoying Alia Bhatt and Ranbir Kapoor's, on-screen chemistry. So like that, you can listen to me and you can do something else. And that something else should be writing down in your notes. Okay, idiot. So chalo, one, objective and scope of financial management. So in this chapter, basically, this is introduction to subject. Okay. In this chapter, you'll understand what are the basic aspects of FM. So do you remember what are the basic aspects of FM? If you remember, tell me. Basic aspects of FM are mobilizing the resources, utilizing the resources. So a simple question. If I am finance manager, I am concerned about two things. How much of money is required and from where I can bring it. So to start a business, I need, say, for example, 100,000 pounds or say, for example, 1 crore rupees. From where I'll bring this 1 crore? Have you seen so many of us, so many people, I'll not include myself in that category. So many of them say, I do not have capital, but if I have capital now, I will do excellent business. Idiot, the first duty or first role or responsibility of an entrepreneur or a finance manager is to bring money. If you say, I don't have money, Dhirubhai Ambani gave money to Mukesh Ambani, that is the reason Mukesh Ambani is rich. Are you nuts? If money is there, I'll do business, is stupidity. Bring that money. That idea, that innovation, or that, I do not say creativity, you cannot creatively print notes, which is illegal. So the procedure of mobilizing money, how can I mobilize money? That is the first side of financial management, mobilize money. The second side is having, made 1 crore rupees available on the table. What will you do with that? Sir, we will go to Thailand and we will have a nice holiday. Idiot, you are not you are a finance manager. So what will you do with this 1 crore? Utilization of money. Invest it to get more returns. Think like Warren Buffett. This is second side of financial management. So how do we mobilize money? How do we utilize money? So in this process, we have 3 decisions: financing decisions, investing decisions, and dividend decisions. These 3. Okay. So write down 3 decisions: financing decisions, investing decisions, dividend decisions. Two basic aspects of financial management: mobilization of resources, utilization of resources. Katam. Chapter 1 is over. Sir, are you kidding me? Our introduction is over, by. When we start chapter 1, I will give you in detail. But this is just, what is there inside chapter. Chapter 2, types of financing. Chapter 2, types of financing. So, in chapter 1, you have, analyzed, budgeted the necessity, and you said, मुझे 1 crore रुपये तो चाहिए ये धंधा करने में. To start this business, to run this business, I need 1 crore rupees. From where you bring that 1 crore? Is it through venture capital funding? Crowdfunding? Is it through donations? Is it through government grant? Is it through issue of equity shares, preference shares, bonds, debentures, loans, project finance, foreign currency convertible bonds, American depository receipts, global depository receipts, angel funding? Oh my God. So many options are there. So many options. That we will learn every source of finance. What is the control dilution attached to it? What is the risk attached to it? And what is the benefit of using it? That we will learn in chapter 2, types of financing. Then from chapter 3, our problems will start, not problems of life, problems in FM. That means problem and solution. You have enough problems in life, that I know. Ratio analysis. Chapter 3 is financial analysis, planning, ratio analysis. Okay. This financial analysis includes ratio analysis, cash flow analysis, and funds flow analysis. Funds flow analysis is not there in your syllabus. That is deleted. Then it is still there in CMA. It is not there in CA. Cash flow is there in accounts. Okay. Group 1 accounts. In chapter 4, unit 2. And also in accounting standards, it is there. In financial management, ratio analysis is there. What are profitability ratios, efficiency ratios, gearing ratios, capital structure ratios, leverage ratios, return on investments, and all. Market related ratio. All these things we'll discuss in ratio analysis. One of very interesting topics, and topics with a lot of life. In real life, we apply ratio analysis a lot. After that, 4 and 5 is a combo. 4 and 5, chapter 4 and chapter 5 is a combo. Chapter 4 deals with cost of capital. Chapter 5 deals with capital structure. What is cost of capital? Say, for example, if I borrow money from State Bank of India, I need to pay 12% interest to them. So along with interest, there can be some incidental costs to the company, like, maybe processing fee, or maybe when you are issuing shares, merchant bankers will be there, registrar will be there, stock market fee will be there, stamp duties will be there, isn't it? Prospectus, red herring prospectus, all this stuff. So all this cost is associated with the mobilization of that finance. So this is what we call cost of capital. Okay, Pavan sir, so many costs. Hello, there will be some benefits also. Tax benefit on interest paid, like that. So that we will learn in cost of capital. So basically, what is capital? Equity capital. What is the cost associated with it? What is capital? Debenture. What is the cost associated with it? That we'll see in cost of capital. Then capital structure is one of the most important areas which will help you to understand the mixture, a judicial mixture of equity and debt. So in my company, what should be the percentage of equity? Like, say, for example, total capital is 100 rupees. Out of total capital 100, equity kitna hai, debt kitna hai? Should I have 50% equity, 50% debt, or should I have 70% equity, 30% debt? Should I have 80% equity, 20% debt? Okay, in India, debt equity ratio normally we follow 2. 2 means what? If your own money is, say, for example, 100 crores, if your own money is 100 crores, your debt can be 200 crores maximum. That is debt equity ratio. That is how even RBI has given instructions to the banks. Okay, not exactly, but something more or less like this. But do you know, in developed countries, like, you call it the UK, the Europe, and the US, Do you know gearing? We call it leverage. They call it gearing. Gearing. Gearing ratio, they call it. Okay. We call debt equity ratio. They call gearing ratio. In India, we call long-term solvency, short-term solvency ratios. They call it gearing and leverage ratios. It is same. The name is different. You know, you call petrol, they call liquid gas. Name is same. Okay. Name is different. Content is same. I mean, so in India, for 100 crore rupees of your own capital, 200 crores of loan capital is allowed. Okay. But in developed countries, gearing can maximum be 30%. That's all. So it cannot increase. So in some situations, in some industries, in some countries, if your own capital is 100 crores, you cannot take loans more than 30 crores. That means which is very less. So they are asking you, if you are doing business, do it with your money, no? But to encourage entrepreneurs, to encourage industry, to encourage business, developed, underdeveloped countries or developing countries, what we call, they encourage you with more loans. But interest rates will be very high, I'm telling you. Okay. You go to developed country, interest rate will be 2%. Housing loan mortgage interest is 1.5% per annum. In India, in unorganized sector and even in organized sector also, we pay 1.5% per month also. You go to any non-banking finance company and you take a loan, you'll pay 18% to 22% rate. Unsecured, 24%. So in developed countries, it will be 2%. So in my 100 crores of capital, what should be the proportion of debt? What should be the proportion of equity? That we learn in capital structure. What will be the impact of this financial plan on the EPS? What will be the impact of this financial plan on the MPS, market price of the share? So if I do this, what will be my market value? If I do this, what will be impact on my market value? All these things we'll study in capital structure. And then students' favorite topic, leverages. Second class, third class boy also will do this leverages easily. Maybe that is the reason majority of times we'll start a new batch with leverage analysis, because it is very easy to calculate operating leverage, financial leverage, combined leverage. But of course, concept wise, I'll take you to another dimension. I'll take you to Mars and I'll bring you back with the concept. But you know, in exam, unfortunately, ICI will never ask you, hey, did you understand leverage concept? They will ask you, calculate operating leverage, calculate financial leverage, calculate combined leverage. You will do tuck, 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 1.5, tuck, 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 1.8, tuck, tuck, tuck. That's what you do. So that is leverages chapter 6. And then financial tables. In this financial tables, probably they'll give, what is that? Present value, future value tables. Okay. In second module, they have given financial tables, which is present value, future value. In first module, what they have given? Because in first module, they have not covered capital budgeting now. Oh, still they have given same. So probably it is same. So don't worry about it. So then module 2 comes. This is little heavier. First module is, warm up exercise. Except capital structure theories, everything is warm-up exercise. Second one is you are seriously discussing about the business, the Godfather. Now, Michael, carry on income. So, important areas like investment decisions, which is capital budgeting, and then risk analysis in capital budgeting. I do not want to discuss more about this now, but I will tell you the background. If I want to set up a new branch, if I want to set up a new business, if I want to set up a new factory, if I want to purchase a new plant, if I want to automate my business, computerize my business, if I want to do business process re-engineering, if I want to restructure something, or if I want to invest money in non-current assets, if I want to purchase a building. So for my business, if I am doing like this, simple, will it be a profitable, worthy investment that adds value to my business? Is it a value adding activity, or will it erode value? Is it a value adding project, or it is a value eroding project? So profitability is one angle. Profitability is one angle. Bigger than profit, value creation. So the whole world, even the objective of financial management is creating value, right? The objective of financial management is not creating profit, it is creating value. So even if you observe in capital budgeting, what do we bank upon? Net present value. It is not net profit. It is not net profit, it is net present value. So what is the value in current present value terms? So will this factory give me more value? Will this new business I am creating, will it enhance my value? Will it create more value to the firm? Do you know, in financial management, the primary objective is creating value? That I know. That I know for the last 20 years. Can you believe? I studied, operations management. I studied project management. I studied human resource management. I studied strategic human resource management. I studied leadership. I studied innovation. Can you believe? One surprising thing, or you call it a slap or you call it a surprising. In all these disciplines, objective is value creation. I'm like, what? So in strategic human resource management, first class, when I learned objective of strategic human resource management is creating value. Oh my God. That means creating value is not the objective of financial management. Creating value is the objective of any management. Isn't it interesting? So you can create more value in visible terms, not invisible terms, in visible terms. Okay, it is confusing, right? So in terms of, in monetary terms, that we learn in financial management. So, okay, this project creates so much of value. That is your, capital budgeting and risk analysis in capital budgeting. Some of the students, they registered for classes and then they say, sir, investment decision is a very important topic, but in my Google Drive, investment decision is not there, sir. This is cheating, sir. Pavan sir and Sundar Pichai both put together. Sundar Pichai, why he is coming into picture? Google, no? Google Drive, Sundar Pichai and Pavan, they looted my money. They did not give this chapters are important chapters. Hello, wait. Capital budgeting is there. Sir. Investment decision. Idiot. Capital budgeting and investment decisions are same. That's it. Okay, thank you, sir. Investment decisions is nothing but capital budgeting. So we are using this investment decision maybe for the last 3 years, 4 years. Before that, when you open book, it is capital budgeting. Then next one will be what is the risk aspect of investment decisions, that we'll see in 8th chapter, which is actually very simple chapter. Then comes the dividend decisions. Simple. When the company earned profit, should I distribute it to the shareholder as a dividend or should I retain it? Okay, question sounds quite simple, right? But it is not simple. So what will be the impact? I earned, say, for example, 4 crores profit this year. Out of 4 crores profit, should I distribute all the 4 crores to shareholders? Or should I keep something for reinvestment? That we will learn in dividend decision. So what will be the impact of retention? What will be the impact of distribution? That we will learn in dividend decision. And finally, one of the most traditional topics in financial management is working capital. Most traditional. Probably 20 years back, if you are doing MCOM, BCom or MBA, your whole financial management could be working capital only. Little bit of capital budgeting, too much of working capital. That's all. I remember long back, was it in 2005? Yes, I completed my MCOM in 2005. 2005 or 6, I do not remember exactly. Yeah, 2005 or 6. Then from IGNO, Indira Gandhi National Open University, financial management module came. I opened 100 marks paper. The full book is working capital. And I'm like, idiot, if it is working capital, why you have put financial management? If a student asks this question to me, full working capital only. Why they put the subject of financial management? They can put the subject name working capital management, no, sir. Correct. But last 4 pages, they have given capital budgeting. No? Sir, correct, sir. That is the reason it is FM. That means traditionally, like maybe a decade or 2 decades or 3 decades back, financial management means working capital management only. But actually, it is much bigger than working capital. Financial management is much bigger than working capital. Working capital has become, can I say, clerical? May not be, not a clerical, definitely managerial, executive level. Having said that, today's finance managers, they do a lot of things. For example, hedging, derivatives, foreign currencies, stock markets. So these are next level FM. That is the reason we put them in international finance and portfolio management. That we'll see in final. So basically, last chapter will be working capital management, which is very traditional. Again, third class, fourth class students also, third class, fourth class boys and girls will understand this topic. You understand? So this is your financial management syllabus. You understand? So today I will give you one homework. From Google, type it in Google and learn. Evolution of financial management. So where it started, how it was born, and the history of financial management, I want you to learn. There are some of my favorite websites as well. One can be Investopedia, teachmefinance.com, investopedia.com. These are the websites. Even you can learn it from Wikipedia also. Okay, previously, if it is a teacher's day, you have to go to your teacher. I remember we used to go with the small greeting cards will be there. So we'll go with the greeting card to teacher. Sir, good morning, sir. Sir, happy Teacher's Day, sir. Thank you, sir. So we'll touch the feet. And in some schools and colleges, there is also an activity of, putting one big, what do we call that? I don't know, vessel. And not a vessel. It's, I don't know. What do you call it? Basin, not basin powder. So you put it, and legs of teacher will be there. You will wash, put the flowers, put it on head, sir. Happy Teacher's Day, sir. Only for that 5 minutes, 10 minutes, you respect teachers. Okay. So that was Teacher's Day. But now, how do we celebrate Teacher's Day? Open your mobile phone, and like Tom and Jerry's. Oh, Google, I love you. Happy Teacher's Day, Google. So Google is the teacher now. So even if someone is dying with cancer also, oncologist, one surgeon will be there, and he'll say, oh, hello, bro, don't do overaction. Okay? Simply because you studied medicine for 12 years, you are not superior to me, okay? Just 12 years you studied medicine, and you think you are superior to me? Shameless. I have Google. Information is wealth. Okay, don't be stupid like that. Okay, but read, learn from Google and Wikipedia. So today your homework is evolution of financial management. Financial management, how it was born and how it transcended various phases and all. Okay, that is what I want you to learn. So this is session 1. In session 2, we will start with a new chapter. Okay, if you have doubts anytime, whether you are a registered student or whether you are a free student watching some lectures in YouTube and all, anytime you can ask. If you are a registered student, you have faculty number and you have a student support number, or in the app chat section also, you can post your queries. If you are a free student through YouTube or through social media, you can ask your queries. Okay, bye-bye. See you in session 2.